Hello, good morning and welcome to this brand new edition of the Newspaper Show right here on ET Now. I'm Cheryl D'Souza and I'll take you through all the top headlines and the stories that's there in the Economic Times. So let's get going with the top 10 headlines that's there in the ET this morning. And first up, it is banks differ with SBI on intercreditor pact. You have Supreme Court that questions the spectrum sale by ailing telecom companies. Moving on, Hong Kong stopover leaves MNCs in India stranded. ICICI Bank launches QIP to raise up to 15,000 crore rupees. Nomura says the economic recovery is faster in the past week. You have India may relax import curbs on top-end tyres. Piyush Goyal says that the trade agreement should be reciprocal. Moving on to cooperative banks may be part of Atmanirbhar lenders. Moving on then, household consumption rises to a 2-year high. An expression of interest invited for IPL title sponsorship. And those are the top 10 headlines that's there in the Economic Times. Now let's move on to the top market headlines that's there in the paper. And first up, it's equity MFC net outflows in July after 4 years. We have Titan post 270 crore rupees loss in Q1. Indigo to raise up to 4,000 crore rupees via QIP. HDFC raises 3,700 crore rupees through bond sale. You have BOB that's posted 864 crore rupees loss in Q1 as provisions rise. And from market headlines on to corporate headlines then, Indus Towers in talks with Jio and Tata Sky as well as Tata Teleservices Limited. You have Reliance Jio proposes 6,000 crore rupees Reliance infratel resolution. Auto retail recovers but still low on a year-on-year basis. Home services companies regain touch as users return. And lastly, comfort wear sees a surge in demand. Alright, those are the top stories that's there in the Economic Times for you this morning. But let me get you the big headline here, and that is that the banks are actually deferring with SBI on intercreditor pact. You have private and foreign lenders oppose uniform and rigid agreement that will be binding on all. To take us through the details of this story, I'm joined by my colleague Poonam. Good morning, Poonam. Take us through this interesting story that's there in the Economic Times that's saying other banks are actually deferring with SBI on intercreditor pact.
Good morning, Cheryl. In fact, indeed, there is some difference of opinion between what the SBI is proposing in terms of the intercreditor pact, and there's a difference of opinion from the other private bankers as well as some of the foreign bankers. In fact, what SBI is proposing is that there should be a uniform intercreditor agreement applicable to all banks in a consortium. And as a result of that, they are stating that whenever a fresh loan is supposed to be given, a bank is if a bank which is unwilling to give fresh loan in proportion to its share in the total outstanding loan, then that particular bank will be required to sell off its exposure and exit the consortium. Many lenders consider such an agreement to be unfair, Cheryl. The lenders are stating that there could be multiple reasons for a bank refusing to participate in enhancing the working capital for a particular borrower. The borrower may have exhausted the group exposure limit, or the banker may want to conserve capital, or simply the additional capital or the additional exposure to that borrower could be risky for the banker, and hence bankers are opposing that a fresh loan should be given in proportion to the share that the lender has in the entire outstanding loan. This is where the difference of opinion is. Some of the foreign banks are also uncomfortable with the provision for an uncapped indemnity in the event of a legal dispute dragging the consortium lender. bankers also believe that a complete uniform intercreditor agreement may not work, and one document for all the banks and all corporates may not work. This is what some of the bankers are also stating. Under circumstances, some banks have suggested a two-part intercreditor agreement, wherein Part A may be standard document applicable to all banks, while Part B could be specific. There are also suggestions to link the ICA to borrowers' credit rating and loan amount. There have been discussions. Some of the private banks have been quite vocal in expressing their differences. We will really have to wait and watch out for, Shell, how this entire thing develops, because these are still suggestions right now. But yes, an intercreditor agreement would have to be put in place with the new framework coming in there in terms of helping resolve the stressed assets which have really increased on account of COVID.
All right, Poonam, thank you for taking us through that story in detail. But let's move on now to ICICI Bank, and India's second largest private sector lender, that is ICICI Bank, is all set to launch a QIP. And what is the amount and what's the floor price for it? Who are likely to bid for it? Varun is here with all the details. Varun, good morning and take it away.
Good morning, Cheryl. So, last year ICICI used to trade at 550, and then when it was trading at 550, it sort of went through a phase where people started putting it in the same category as an HDFC and a Kotak, and they said that, okay, ICICI Bank valuation can catch up. Now, today, if you look at the situation, it's very different. ICICI is nowhere in the same batting range as HDFC or Kotak, given everything we've seen over the last year. A lot of the people believe that some of this has something to do with the fact that they had not raised capital till now. Kotak had raised. Now Kotak's trading almost within 20-30% of its 52-week high, or in a sense it's caught up the most. HDFC and Kotak have caught up to the most to the pre-COVID pain, but ICICI is still lagging far behind them. They had a very good performance in Q1. So the missing link, really, what I'm trying to say, is the fundraise, which now seems to have come. They told us on July 8th that they're going to raise 15,000 crores. Then for 1 month they went quiet. No one heard anything from ICICI Bank. Now we've learned that the QIP has been set in motion. Floor price has been set at 351 to 352 rupees per share. Typically, you offer a 5% discount to this price, but what sources are suggesting right now is that there's not going to be any discount. Yesterday's closing price was around 360, so people are thinking shares are going to get allotted at a price of around 358 rupees a share. So that's a really good thing. If you're looking at 15,000 crores that needs to be raised at this price, you need to buy, or rather issue, around 42 crore shares. So that's likely the amount of shares that will be put up for sale. And then you should be seeing participation from the likes of an Atmanirbhar, Adya, CDPQ. At least this is what the sources are indicating right now. So that's how the ICICI Bank fundraise is panning out, Cheryl.
All right, Varun, thanks for giving us that story actually about ICICI Bank. But there is another player that's all set to raise funds, and that is Indigo. So take us through the story and how is Indigo going to raise these funds?
Sure, Cheryl. So it's fundraising season, it seems, today, and not just today, the last month. There's just been so many fundraisings. Yesterday, Info Edge had a QIP. We know Kotak, Axis are just completing their fundraisers. So there's just all around you, people are raising funds. Now, Indigo, the nation's strongest airline. People always say it's stronger than Spice, it's stronger than Go, it's stronger than Air India, it's stronger than Jet. But even Indigo had to lay off a lot of staff this quarter. Now, when the country's largest, most profitable and efficient airline needs to do that, and when they need to come and raise money, it shows you that the situation's really tough. So they're going to raise 4,000 crore. And what's really interesting is Indigo's prided as the cash-rich balance sheet, the debt-free balance sheet in aviation. So they may not be taking debt, but they're going to issue equity to raise money because they need to. So 4,000 crore, we still don't know the price. We still don't know, so we don't really know who's going to participate or where the money is going to be raised from. All we know right now is that they are going to be raising 4,000 crore via QIP. So it's going to be equity and not debt. That's what we know for now.
All right, Varun, thank you for taking us through those two important stories. That's ICICI Bank as well as Indigo, all set to raise funds via QIP. Now let me shift focus on to a story that's there on the page 1 of Economic Times, and this is the story that I'm going to talk about, and it is about Hong Kong stopover leaves MNC stranded in India. So what is this story all about? I'll read it directly off the newspaper for you. You have multinationals using regional headquarters in Hong Kong to set up operations in India or do business in India have got caught in the crosshairs of new government procedure norms, also procurement norms, ostensibly targeted at Chinese companies. The government is looking into the issue after industry flagged it to the finance ministry, said the people who are familiar with this matter, that sources have told this to the Economic Times. They also said the ownership could be taken into account during the registration process. So that's the deal coming in. Industry have sought clarity on new government procurement norms. New order imposes restrictions aimed at companies from China. Many United States, UK and European companies invested in India via a Hong Kong entity. So there you go, companies which have actually headquarters in Hong Kong and they want to set up operations in India are actually caught in the crosshair of the new procurement rules that is actually targeted at Chinese companies. Alright, then let's move on to another story that's there in your Economic Times, and this is about what the Supreme Court had to actually say yesterday in the AGR case, and with all the details, my colleague Abhimanyu is here. Abhimanyu, good morning. Take it away.
The top court has asked telecom companies currently undergoing insolvency proceedings to file hard copies of their respective replies before the top court. The court on the 14th of August will analyze the financial details of telecom companies and determine whether they are faking bankruptcy to avoid paying AGR dues. The top court pulled up the DOT for not appealing in time against the tribunal order which had ruled in favor of telecom companies. DOT today had submitted that they oppose the spectrum sale by telecom companies, claiming that spectrum cannot be sold or traded by telecom companies since it's a natural resource. It can only be allocated by the government, and hence the government was opposing listing of spectrum as part of assets by Aircel, Arcom and several other telecom companies currently under liquidation. It remains to be seen what is going to be the stand which would be put forth by telecom companies on the next date of hearing. Also, DOT had submitted that they had filed an appeal before the top court in this regard, which was currently pending hearing. The top court verdict on the timeline which would be given to telecom companies to clear pending AGR payments is still awaited. It remains to be seen what time would be given to telecom companies to clear AGR dues, since many of them have claimed that they may have to shut shop if they do not get ample time to clear AGR dues.
All right, Abhimanyu, thank you for taking us through that story and what actually transpired in the Supreme Court yesterday. Let's move on now to the area of sports, and this is about IPL. The Indian Cricket Board has invited expression of interest, that's EOI, for the title sponsorship rights of the IPL 2020 that is scheduled to kick off on the September 19th in the UAE. So BCCI has asked the companies bidding for the deal that they must have an annual turnover of at least 300 crore rupees as per their last audited accounts. And what else are the conditions and who else are likely to bid? I'm here, my colleague Utkarsh is here with all the details. Utkarsh?
We were telling our viewers from the morning that it has happened. The EOIs for IPL 2020 have been submitted. For the first time in IPL history, the title sponsors will be only given for an year. It is a very short time. By 14th August by mail for 4 days and 4 by 18 by post. In a month IPL is starting. We've been told the minimum capital you need to have, the turnover of the company needs to be 300 crore rupees. What I've been told is that is around the amount. IPL governing council is also expecting it will be a drop of almost 25-20% from what we was paying, but the organizing council, the governing council and BCCI recognize the current pandemic and more importantly the 11th hour notice they have given. A lot of people in the fray, Patanjali has gone ahead with his local for vocal tagline and has said they will be interested. Apart from that, it is Jio, Amazon, the new age players, Baiju and Academy were also in the fray, backing the title rights for the IPL 2020.
All right, thank you for taking us through those details, Utkarsh. But let's now move on to a story that's there on the page 5 of Economic Times. And this is the story that my colleague Vinny will be joining in to talk about. And that's Indians locked inside their homes lift the household consumption to a 2-year high. So what are the items that has seen high consumption? My colleague Vinny is here. Vinny, take us through the details of this particular story. So what are the items that Indian households have consumed?
So Cheryl, that all of us have been sitting at home and consuming a lot of normal food items, like other than packaged food items, your normal home consumption items like biscuits also have seen a nice uptick, and that is what we are seeing. All FMCG companies are also seeing. So the sales of FMCG products have grown by around 4% in April to June. As out of home consumption has sharply declined, is what this report is suggesting. And now products like groceries, home care and personal care products, all these have surged to near a 2-year high, according to the ET reports. Even if you go to see the management commentaries of Marico, they also said that people staying at home, they have seen a nice increase in household consumption, and the volumes also of those products have really seen an uptick in sales. Also, Britannia, they in their commentary they mentioned about how the sales have expanded by 25%. HUL also focused on saying that they have seen a big burst of demand for jams, ketchups, which are normally home consumed items. Even ITC pointed out that bingo chips, noodles, biscuits, dairy products, all these are their products also, which have seen a nice uptick. So mainly FMCG food related products is what they've seen an increase in. But if you go to see, even while Nielsen, according to his report, said that they had seen an 18% decline in FMCG market in April, but Nielsen only covers retail sales of packaged goods, while there's another there's a panel called Cantor World Panel, where they said that we are seeing an increase in volume growth, and that is because they cover all the other food items and beverages as well. Mainly they focus on overall volume growth of these items. So that is why this report suggests that we are seeing an increase in home consumption items.
All right, Vinny, thank you for taking us through that story. But hang in there, you had Titan that reported its Q1 earnings yesterday. And how were the earnings? It looks like it's a loss, but was it expected from Titan?
Titan's earnings have mostly been largely in line with what we were expecting. The losses were a bit more than what we were expecting, and they came in at 270 crores. And this is like the first time in more than 15 years that the company has reported a loss. So surely, the COVID impact has really pushed Titan in the red. And, it's been a very tough quarter overall for all retail companies, given the discretionary nature of the company, and that is what has impacted Titan as well. And consumer sentiment also has been quite weak during this time. So overall the revenues declined by 63%. The company also reported an EBITDA loss of 246 crores. Even its jewelry segment, which is 80% of the business mostly, that also reported a loss of declined by around 56% during the quarter. So all this is mainly the wedding season being postponed, the lockdown, plus weak consumer sentiment. Consumers are not spending much on discretionary items, is what has overall impacted the company. And they have also said that by June the company said that they were seeing recovery, and especially in gold, where the sale of plain gold jewelry, they've seen a nice uptick over there. So that is something interesting, and we'll keep an eye out for that trend, as despite the high gold prices, they are seeing that consumers are coming and buying plain gold jewelry. So that is a trend we can even watch out for going forward as well. But Titan in general expects to come back to normalcy by Q4 FY21. So they are expecting a good recovery in the coming months and festive season. So we'll keep an eye out on that on Titan. But this time it was an inline set of numbers, Sharon.
All right, thank you for taking us through those details, Vinny. Let's move on to now page 6 of Economic Times, and there's a story that's saying Jio proposes a 6,000 crore rupees resolution, Reliance Infratel resolution. So Reliance Jio has proposed a 6,127 crore rupees resolution plan for Reliance Infratel. Also, the plan includes an upfront payment of about 4,500 crore rupees to the creditors. Jio has actually tabled this particular resolution plan in the NCLT on Monday and said it had additionally paid 250 crore rupees for asset maintenance because of the certain facilities were used by the lawyer families. This is because of the certain facilities used. This is what the sources have actually told Economic Times. So there you go. That's a big story coming in. The Reliance Jio has proposed a 6,000 crore rupees Reliance Infratel resolution plan. But let's move on to another story that's there on the page 1 of Times of India, and this is about the former president, that is Pranab Mukherjee. He's been put on ventilator after a brain clot surgery. Remember yesterday, earlier in the day, we had actually got the news that he had actually tested positive for COVID-19. So former President Pranab Mukherjee was put on ventilator support on Monday after undergoing a surgery to remove a clot in his brain. He also tested positive for COVID-19. So that is the latest coming in, but we will be following up on the story later in the day as well. So that is one of the stories that you need to watch out for. Also, you have another quote coming in the ET, and that's in the Q&A section, and that is of the Zydus Cadila chairman Pankaj Patel, who's talking about the vaccine and how he's hopeful of it coming by March. You can check the quote on your screen. Now let's focus on the top 5 headlines that's coming in the Times of India this morning. And first up, it is 29% of the world's new cases are actually found in India. Moving on, talking about the former president Pranab Mukherjee on ventilator after a brain clot surgery. Government mulls duty hike on textiles and cameras. Sachin pilot cancels flight from Congress. And Lebanon government quits in wake of the blast. And those are the top 5 headlines in the Times of India this morning for you. But with that, it's a wrap on this edition of the newspaper show. Thank you for watching. But before I wind down, there's a special segment for the hearing impaired.